Good afternoon, everybody. Welcome to TraderMerlin Show, Monday edition, the 8th of January today. Trucking on through the year. Hope you all had a great weekend out there. I should have caught up on a lot of things. I didn't. I'm still way behind a lot of things. So I got about 4 emails of people that need to be added to our S&P 500 list. Hello, Ed, up in San Jose. Hope you had a great cruise. Good to hear from you. I was worried. I thought maybe you just abandoned me after all my mistakes over the years. But glad to see you're back, and I'll get your name added to the list. And for those of you that are sticking to your challenges and actually doing something constructive every single day, I have broken it. I missed 2 days of my 30 burpees, but we're back into it. When I do these challenges, sometimes I like to take like the Friday off. But Jimmy, Margaret, Carrie, Tom, Les, hope you guys are still cranking out at your challenge for 2024, at least for January of 2024. Okay, let's get down to what the show is about today. I was supposed to have Todd Davis on the program today, but they're going through a whole bunch of things over there, and he said, I just can't make it, got called into a meeting. So unfortunately, we won't have Todd Davis on the program today. And I thought, you know what? Maybe I can pretend I'm bipolar and do a show where I interview myself. Now, it's going to be a weird one. I don't usually do too much interviewing of myself. I should have worn like split change of clothes, and I could just, yeah, I can't do that real quick. Maybe 2 cameras. Anyway, here's what we're going to look at today. At least I want to get this down on paper and have my documentation about what I think is going to happen in 2024. So our guest today, you may have seen him on the Power Trading Radio show that he hosted from 2010 all the way to 2020. You may have seen him at speaking engagements around the world for the Money Show, or even teaching universities, or his freak account appearance on CNBC. He has yet to finish writing his book, and he's doing really nothing that special. Your guest today is none other than Merlin Rothfeld. Welcome to the show, Merlin. How you been, my friend? Oh, I'm doing great. Oh, man, so formulaic, isn't it? Anyway, let me go through it one by one, the same questions that I asked my guests over the past week, and I will have more guests this week for those of you who might be joining us anew. I'm extremely excited about tomorrow. Hopefully it all goes smoothly. We're going to have Jeffrey Hirsch on. He is the owner of the Trader's Almanac, which is one of the best statistical settings you can get. If you're looking for numbers and data and historical patterns on markets, that's, I think, the best place to go for it. So looking forward to having him on the show. We're going to have Jeff Manson on the program on Wednesday. We're going to have Corey Lane on Thursday. And then I will be back solo in the saddle on Friday. All right. So thanks, Pepe. I appreciate that. Always been great. A little bit weird sometimes, and I wanted to really pretend I was interviewing myself. So Merlin, when we look forward to the year 2024, what are your biggest concerns? Now, for those of you who have been watching this show with regularity, you know what my biggest concerns are. You could probably type them in the chat and beat me to the punch. But let me just go to, if I was on a program right now being interviewed, let's say I miraculously was brought back to CNBC, and they asked me this question, I would start by, prioritizing much like Larry did. I really like the way that Larry presented on Friday. Bullet point 1, 2, 3, 4, 5 things he was really concerned with. The most important thing, if I was to put it at number 1, and I'll work my way down. I should have put them in bullets and gone backwards. But the number 1 most important thing to me for 2024 is the price of energy. I mentioned this before, and when we look at the statistics behind how much inflation has declined over the past year, the bulk of that has been because of energy prices. Now, as we know, it's an extremely volatile sector. If it wasn't volatile, they wouldn't exclude it from consumer price index and PPI numbers with regularity. So it is incredibly volatile. And that recent, decline, which I will share with you guys, here's your screenshot of it. Your live charts. Going back into September, we had this gigantic drop, again, down today, 3.89% for crude oil. But from the peak to where we are right now on crude oil, you're looking at a slide of, drumroll please, 25%. And I just can't help but to think that that's going to tick back up. I think it's just too strong of a decline, and given all the external factors. And to me, you ask, well, why energy? Why not some of these other factors? Well, I'll get to those. I'm definitely seeing other things as being problematic for the market. But this is a single purpose piece that has so much peripheral impact. So, for example, obviously, you and I are privy to the price of crude oil at the pump, right? It certainly impacts that, and if the oil drops, gas gets cheaper for us. Great. Well, I don't really bother me that much because I don't drive that much, so I don't really care what the price of gas is. However, if oil prices start to surge again, then that means inflation starts to tick back up, which means that the Fed will maybe not start to cut rates in 2024. Because remember, a lot of people are citing as number 1 the election and number 2 interest rates. Well, I think that energy is this dark horse that's going to impact the interest rate debate. And if we start seeing inflation tick back up, it puts the Fed in that position of we can't cut rates right now because the inflation numbers, which we've put so much emphasis on, is starting to rise again. And it doesn't take much for oil to spike back up. If it does, all those rate cuts that we've been anticipating, I say we have been anticipating, I'll say the market has been anticipating, that all starts to change. And right now, most of my guests have been pretty clear on their opinion that the Fed is being a little, or the market is being over optimistic with regards to rate cuts for the year. Here's our expectation going all the way into December of 2024. I know we've talked about this a bit, but they're thinking a 1.5% reduction in the Fed funds rate right now, which certainly would be good for the housing market, the equity markets, and all that. But if inflation stays persistent or surges up again, then I think that this whole table starts to shift to the right, and all of a sudden it's like, oh, maybe we only get 1%, or maybe it's 50 basis point cut this year. So to me, that I would put as my number one impact for 2024 is going to be the price of crude oil. And it's tricky. I think if we say the ability to influence an election, well, we know we can sway elections, especially the way the social media platforms go. But to sway the price of oil can be done very quickly with not much effort. I mean, heck, a missile hits an oil tanker in the Suez, and all of a sudden oil's up over $100 a barrel, like snap of your fingers. It's crazy. So I just feel like this is such an easy one to manipulate or get a surge up. I'm putting that as my number one. Number two, I would say, is the election. I think that's a no-brainer. Everybody knows the election years, and we all have statistics on it, right? The election years typically say that the markets move up about 7% on average, which is 1 to 2% less than the historical average of the market. So, interesting. That means that during election years, historically, it's worse performing than a normal market. However, 7% is that target. Now, all things being equal, I would think we're going to have a bullish year simply because of the election cycle and the historic numbers that it brings. However, I mentioned this before, just by watching what went on in Colorado and what went on in Maine by saying this candidate cannot run in our state, I think that this starts to polarize America even more, if that's possible. I feel like we are so polarized at this moment that someone just wears a blue hat and someone will yell at him for being a Democrat. Oh, you suck. Or a red hat, you're a Republican, you suck. Whatever. Unfortunately, we've lost that fundamental piece which makes us all Americans, and that we are living in this country together, and we should work together and appreciate differences of opinions without getting hostile or overly emotional about it. However, I think social media has caused this rift, and by telling one candidate that they can or cannot run in different states, you polarize those states or those followers of those elected or politicians, and I think that makes the situation even worse. And I'm worried that at some point it's going to continue to polarize us till we start to get internal conflict within cities or at election rallies or presidential debates where we start to see hostility and maybe some bad actors step in there and create bad things. So the election to me is, aren't we the disunited states, you mean? Yeah, it does feel like we are disconnected. I mean, deep down, you kind of feel we're connected, but just, I really feel that social media has done this to people. I'll give you a good example. I've got a friend of mine who I go back to when I met him in 2009 was, he was definitely very, very strongly one side. I won't say which side because it's no point to polarize the audience here. And he started looking into specific things that he found interesting about his elected officials or political party. And what happened is he's being fed deeper and deeper and deeper and deeper into conspiracy theories and hostility towards the other side and aggression, because those sensational headlines are what keep people reading. So if they post a nice headline, hey, Democrats and Republicans got together and shook hands and agreed on something, that's not sensational. But if you print a headline that says this Democrat or this Republican official or elected official, did something dramatic and stole from this person or shot this person or lied about this, that's sensational. So all of a sudden, his news feed is nothing but sensational headlines, and it's radicalized this guy. He now hates anybody from the other side, the other party. Mind-boggling to me, and I think many of you know people that are in that situation. That's what Marxism looked like, yeah. Sadly, I'm hoping that the intelligent people prevail and step back and go, you can have your opinion and I don't have to be angry at you in any way, shape, or form. we can all put our actions to the test by voting. Anyway, I'm going off on the rails here. I think number 2 is the election, but not for the same reasons that everybody else does. I believe it's going to continue to, I think bifurcate is the word, or divide America, and I don't like that. I think that leads to bad results, where it polarizes so much that one individual will say, I'm not going to go to Chick-fil-A because they're, conservative Republican, or I'm not going to go to this place because they're too liberal or Democrat. It's like, I don't know. I think that divide's going to get deeper and deeper and deeper, and that kind of frustrates me, unfortunately. So, 1 second here. I should not have my phone ringer on, and it's off. I'll say educated, John. I'll say educated. The Supreme Court will decide if he can run or not everywhere. Yep. But that's the part I think is going to be the wild card for the markets. And how does that impact it? I don't necessarily know. My fear is it becomes so extreme that you see attacks, that you see things, demonstrations that get out of hand, and I really hope it doesn't happen that way. So number 2 is the election. Obviously, you have historically markets do better during an election year. I'm curious to see who gets elected, and then I'm really excited about 2025 because now I have a path for the next 4 years. And at least I know whoever that politician is that becomes president. And at this point, doesn't matter. Whoever that is, I can now look at their platform, who they bring to support them, and what their actions are going to be. And I can hopefully take advantage of how they steer these markets, whether that's to the up or the down, doesn't matter to me. So yeah, election number 2. So number 1 is energy and inflation. Number 2 is going to be the election. And number 3 is the Federal Reserve. It's impossible not to have this as one of the most important things because we've been on this unbelievable spree of printing money, supporting the markets, backstopping our economy. If anything starts to go bad, we just put money into it and fix it. This is not the way to go. It's just worked, and at some point that's going to come home to roost here. And I'm a little frustrated about that. But hey, we are all just here to ride whatever the markets give us. So I think that you're going to see by the end of next year, we will not be at this 4%. I think we'll probably be right around 5%. I think we're going to get rate cuts, but I think it's going to happen near the tail end of next year. I think it's going to wait a little bit longer than what people are expecting. Right now, because the inflation numbers have dropped so rapidly, I think most analysts are looking at this going, oh, we're going to cut incredibly quick. Let's look at the probability of when the first rate cut is going to happen. Next meeting is January 23rd. Not going to happen then. You can see there 95% chance of rates staying the same. We go out to March. There's a 59% chance right now that rates are going to get cut in, actually it's more than that. It's about 61.9% chance we're going to get a rate cut in March 20th or on March 20th, right? That's when the markets have priced in the first rate cut. I don't believe you're going to see that. I just don't see it happening that quick. I think the pause idea is a better way to go for the Fed, but we will wait and see. Let's see. Yeah, exactly. Big Bryce says, we can't fall for the BS. Facts are facts and opinions are opinions. Respect each other and be nice. Yeah, that's the problem, though, is, you look at the media and how do we know what's real anymore? If you look at what AI has done, oh my goodness, man. I think I may have played a video clip in the past. I'll see if I can find a decent one for you. But this AI stuff now, I can say, give me a video of Joe Biden, and I can type in a script. You can make him say anything you want him to say, and it will have his mannerisms, his eye twitches, his pauses, you'll go, man, Joe Biden said that, or Donald Trump said that, or Obama or Bush, whoever you want. You can make anybody say anything with AI, and it looks 99.999% perfect. So now, to Big Bryce's point, facts are facts. So when you watch a video and you hear a former president say, America is a terrible place, America is garbage, you're going to be shocked. Oh my God, why would you say that? Truth is, they may have never said that. However, somebody created a deep fake, which is almost unrecognizable now, and we perceive that as being fact because, hey, I saw it from the horse's mouth. He said it. I watched him say it. Right? That's where the challenge is going to be in AI. You look at what Elon Musk said, this is probably 5-6 years ago. He said, World War III will be started because of AI. And when I first heard that, I was like, that's kind of weird to say the World War. But the deeper we get into it, the more I realize he's probably right. where someone will create deepfakes that create conflict between countries. I believe that during the Hamas Israel confrontation, that somebody on the Israeli side had made a deepfake photo of a Hamas soldier carrying dead babies, and it wasn't a real photo. We get brought into this stuff. It's so challenging to find out what is real. I'm one of those people that when I see something, I'll always try to go and find facts that substantiate that specific event as being true or not. But I think the challenge we'll see in the next decade is going to be very, very, very challenging to deal with AI and deepfakes. Let's see. Does the SEC feature on your list for potential damage to crypto? So I'm getting there. I got to follow the same thing I do for my guests, which was, what's my biggest concern? Biggest concern is energy, mainly crude oil. If I have to do my top three, as I just mentioned, energy, we're looking at the election, and I'm looking at the Fed. Those are my big three. So if I was to say, what do you think are going to be best performing market segments? It's no-brainer for me. It's a no-brainer for me that cryptocurrency will be the best performer. You look at what happened in Bitcoin over the last 24 hours. Let me bring up the chart of this for you guys. We've had a huge run in Bitcoin today. We've broken out. Remember, we've had these down days, and I keep saying, don't worry. We're on a beautiful uptrend. I mean, we're making higher lows, higher lows, higher lows. This looks great. Now we just broke out. We hit a high we have not seen since, doesn't seem like that long ago, but going back into April of 2020, we were up at that 47,000 mark. Well, the futures just broke 47,000. They hit an intraday high price of 47,800. Looks like a breakout that's going to have some legs behind it. I believe that this is because the expectation is that on Wednesday we are going to get the Bitcoin approval. I think you're going to get that Bitcoin approval for ARK. Next week we have 6 or 7 different companies that are slated to get a decision from the SEC. All right. Yeah, it's the Securities and Exchange Commission. Sorry, I got so many. After watching football, I got all these anagrams in my head. So I think that best performing market segment is going to be crypto. I think that, I know it's not one of the 11 S&P market segments. I can go back to that specific one if we want to. But I think that you're going to see, not only does the spot Bitcoin ETF get approved, but we have 4 or 5 companies that get approval. Now, for those who may not be familiar with crypto or involved with it, it all revolves around Bitcoin, right? If you look at the galaxy, the solar system, at least at this point, Bitcoin is the sun. And everything else just kind of circles around Bitcoin. As Bitcoin gets bigger, the whole ecosystem gets bigger. Now, that's going to change in the future. I think you're going to see something overtake Bitcoin. Remember, Bitcoin is just a monetary, it's self-banking, it's custody of your own money, it's actual physical hard cash. Whereas Ethereum, Solana, Cardano, Avalanche, Storage, Render are all doing some different product, some different business model that's not related to money per se. It's decentralized business structures. So at some point, they may take over, but for now, Bitcoin is the epicenter of it all. And if Bitcoin continues to grow, then so does all the tertiary products and cryptocurrencies that are in that ecosystem. So I think you're going to see a big surge up. Now, later on this year, as we get into the debates and candidates coming out with, this is my platform that I'm running for, you'll see a lot of people, I believe, jump on the bandwagon of digital assets. Because if you look at the digital asset space, I think many of you would agree with this, it's predominantly younger people. It's predominantly younger people. Now, granted, I'm one of the older people in it. Big Eb, you might be as well if Big Eb is here. But you look at what Bitcoin is, it's typically going to be the younger generation. It also represents innovation, technology. So anybody who's looking at pro-business, pro-jobs, would be wise to have a positive stance towards that. Now, if you look at our current president, an old curmudgeon that doesn't understand the markets at all. I don't even think he knows his name, but that's a different story. You look at who's pushing him with all the information. It's Elizabeth Warren, who used to be anti-big banks. Now, all of a sudden, she is pushing this because big banks are on her side, saying, we'll work with you if you hold cryptocurrency at bay because it threatens the banking system. So I think there's a lot of new candidates out there that are saying, I'm okay with digital assets. I'm pro-digital assets and innovation and jobs. And I think that that's going to be a big thing on the ballots as an initiative that people are talking about going into our election. And I think it's going to be much more prevalent. That said, what does that do to the ecosystem? I think it brings more attention to the digital asset space. And if we get regulation and some legitimization of it, then we can start to see more legalization. So if I get rules around crypto, which I don't believe will happen this year. I thought they were going to happen this year, but probably not. There's a couple bills right now going through that may get passed. They're pretty positive towards crypto. But the real rails, I think, are going to happen after the election, depending on who gets elected president. And hopefully the president and their administration is going to be pro-crypto. Now, let me be very clear here. I am not pro everything digital assets and crypto. I've mentioned this many times. Most of it's scams. Most of it's frauds, totally deceptive stuff that's designed to steal your money and serve no purpose, right? That's the majority of cryptocurrency and digital assets is that garbage. So if I look at the 2+ million projects out there, I'd say maybe there's 1,000 that are legitimately working hard to build something that could change the world. Out of those 1,000, I think there's probably 30 or 40 that are like really making progress. And those are the ones that I'm trying to put in my portfolio. Again, the most of it's garbage. So if you're buying anything, yep, Pepe knows, Pepe Coin. Pepe Coin's one of the worst. It's horrible. Let's see. Why are some people thinking that the miners, Riot, Mar, are going to turn bearish and drop once the ETF is approved? Great question, Lisa. No, not 100% on that one, but my feeling would be that there's a run-up in the price of the miners, obviously, because the Bitcoin price has gone up. They hold Bitcoin on their coffers, so it should go up. But the other piece here, I think, and this is a kind of extrapolation of what I'm seeing in the market, is these firms need to buy Bitcoin to the tune of hundreds of thousands, if not millions of Bitcoin need to be purchased to fund these ETFs. And if they all get approved, that's a big surge. And I think that what's going to happen is part of the move in Mara and Riot Blockchain and some others, Hut 8, is that they're getting more institutional money pouring in, and they may actually get bought out by some of these institutional firms, so the institutions can have access to that Bitcoin to fill the spot Bitcoin ETF. So I think not only are their miners rallying because of the expectation of potential getting purchased or bought out, but also because of the price of Bitcoin. Now, once the Bitcoin spot Bitcoin ETF gets approved, you're probably going to see the day it gets announced on Wednesday, if it happens, a sharp spike up, and then it's going to come ripping back down. This is going to be a case of buy the rumor, sell the news. So to me, that's it. It's going to be a buy the rumor, sell the news type of thing. So you look at the chart of Bitcoin here, you can see that for the better part, going all the way back here to October of 2022, it's been on a beautiful run. I mean, we had over 150% gain in 2023 alone. So far, off to a good start, but a lot of this has been the anticipation, particularly here from September of last year on, has been the anticipation of a spot Bitcoin ETF getting approved. Now, I've mentioned this before, that out of that list of 8, or I think it was 13, now I think it's down to 9, all the companies are trying to apply for the spot Bitcoin ETF. If they all get approved, great, but they won't all survive. They will not all survive. What will happen is ultimately some of those will disappear, and it'll probably get down to 2. So you look at the Bitcoin futures as a good example. The first Bitcoin futures was done not by the CME. It was done by the CBOE. They came out with the first Bitcoin ETF. I think it was like December 7th of 2021, maybe. And a week later, the CME came out with theirs. So you have 2 entities competing with the same basic product. CME won because their product was better. And just backed by the CME. Again, the name behind the product is what helped it succeed. So if you look at some of the names now for these spot Bitcoin ETFs, you've got Van Eck, Wisdom Tree, ARK, BlackRock. Or BlackRock is the name. You go, BlackRock's the one you want to be in. Most likely that will be one of the ones that succeed. The drop would be a good time to buy more. I definitely think so. No, Sly Dog, I'm not saying buy Thursday. I'm saying if we get approved on Wednesday, which I believe we will. I think that the ARK fund will get approved. Although, part of me, because this is the final announcement for ARK. They have to, the application gets dropped after this if they get a definitive no. They have to reapply. I would wait until you see the Bitcoin ETF approved, and then I would wait about a week just to see what happens, because most likely what will happen is multiple will get approved. They'll probably approve 3 or 4 at once just to save face. Remember, if they approve BlackRock without approving anybody else, people are going to be going after the SEC for collusion and cronyism. So they'll approve several at the same time to go, okay, you guys can all have it. Even though we want BlackRock to succeed because we're in bed with BlackRock, will approve these 4, but ultimately BlackRock will win. So I wouldn't buy Thursday. I would wait until you see price drop significantly after the SEC is out of the way of this, and then I would look to buy some at a level that you feel comfortable with. Because long term, pretty sure Bitcoin's going to go up. Tom says, I wonder if someone will build something like subprime mortgage-backed securities, but with crappy crypto, the U.S. can back it. It'll be great. That's funny. Yeah, subprime crypto portfolio. It's basically just called the meme subprime portfolio. Would be the meme portfolio of crypto. No, let it all fail. Let it go away. Let it all die. Lee says, hopefully BlackRock, ARK, Fidelity, GS, other financial institutions buying ETF, understanding what you just said about the shitcoins. Yeah, I hope so. I hope it gets clearer. I hope it gets clearer to the regulators that some of the stuff has to go. Shiba Inu's got to go. Garbage. Bonk. Get rid of this crap. Pepe Coin. I'll give Pepe Coin credit. Pepe Coin is the only one that has stood up and said, we serve no purpose. We have no value whatsoever. We don't do anything. This is just a joke. I mean, it's on their website. Like, says that. I'm like, bravo. Good for you guys. Anyway, so that's my thought on the Bitcoin crypto side of it. I think that crypto, whether you want to talk politics or not, I know Ricardo's like, let's just go to trading, not politics. Politics are going to swirl around crypto for a while, right? That's going to be a very big talking point for our elected officials. Now, what about the worst performing segment, right? So I've got my best performing. To me, that's going to be crypto. The worst performing segment for 2024, in my opinion, is going to be consumer discretionary. Let me see if I can bring this up for you guys here real quick. I think consumer discretionary, which is things you just don't need. I'm talking luxury goods and items like that. 1 second. Tough for me to type this one in and talk at the same time. I think that's going to be your worst performing market segment. And it was one of the better performing in 2023 because money was there. Now all of a sudden you got more and more debt. I just don't see the reckless spending continuing on. So let me go over here to perf charts. We'll do a perf chart of it. All right, 1 second. So for those of you who might be new, if you go to stockcharts.com, great resource for you. And you can type in here, it says perf chart, and I will put in like SPY just for an example. And once you select perf chart, it actually means performance chart. And if you look over here, it says define groups on the right-hand side. If I click there, you can see S&P sectors. So there's your consumer discretionary. It was XLY, right? And if we go back 200 days, let's go back the full year. So we'll go back to January. This right here is 1 year, right? So our worst performer for the year has been discretionary. I thought we'd look at this the other day and it was the best performer. It was one of the bigger gainers for the year. Oh, sorry, this goes back to 2022. I'm sorry. Let's go back to January 2023. That's what I wanted. There you go. So this is that kind of 11 sectors we looked at. Best performer on here is technology. Then you had communication services and consumer discretionary. I'm looking at this going, I think consumer discretionary is going to be one of the worst performers because money is going to get tighter and tighter and tighter. If they keep cutting rates like this, money is going to get cheaper and cheaper and cheaper and tighter for more people. At least that's my take on it. So I think that's going to be one of your worst performing sectors. Utilities were grossly underperforming. I'm actually bullish on them. I don't think they'll be the best performing market segment, but I definitely think they'll be positive for the year. So there's my best performing segment, and worst performing would be Bitcoin, and worst performing would be discretionary. All right, and final. Where would the S&P 500 be at the end of 2024? The answer is I have no clue. I can come up with 1,000 arguments as why we'll be higher by the end of next year. I can come up with 1,000 arguments why I think we're going to be lower by the end of next year. So I guess it depends on which hat I'm wearing. I personally, deep down, I have a slightly bearish bias. I do think we're going to have recessionary impact on our markets in 2024. But we're not seeing anything like that right now, which makes it obviously very challenging to make these forecasts. So let me see if I can bring up my list here. Here's our 2024 forecast. I took the easy way out this year. I didn't have a real clear decision. I think we're going to have a lot of volatility. I think we're going to see big fluctuations in the markets. I think that's what Larry was pointing out as well. I love what Scott McCormick said. I need to be flexible, right, for what these markets give me. I think we're going to have great bullish periods and pretty big bearish periods as well. But all in all, I don't think we're going to have that robust of a year. So I'll put my guess on this list. And the reason I put mine right where it's at, which is right 5102 was my number. Why 5102? Because I said, give me the historical rate of return for the market during a presidential election year. That's 7%. So I did 7%. I know it's cheating. It's kind of the easy way out for me on this one. I know. It's definitely the easy way out of it. I'm going to stick with that number. Although, if I didn't go with that number, I would think you're going to be down next year, or down this year, even though we have an election year. I just think there's too much turmoil and frustration. But I'm going to stick with that 7% because that's a historical number. So there, I'm documented at 5102. For the viewers, let's go and look at what's in consumer discretionary. Liz is like Amazon and Tesla. Yeah. Tesla is going to get hit a little bit here because some of the government subsidies for electric cars have disappeared for Tesla. Certain models get it still, but some don't. So let's just look at XLY. Another one of my favorite things to do is, if you don't know what's in an ETF, what the constituents or components are, you get a bar chart, just type in your ticker symbol. Here's consumer discretionary. You scroll down on the left-hand side, it says constituents. And it now shows me the top, number 1 and number 2, Amazon and Tesla. Look, I don't think Amazon's going anywhere because I think Amazon just replaced like Walmart. So I still got to buy stuff. I think to me, Amazon is still going to do well. That's just crazy that it's 22.6% of consumer discretionary. However, Tesla, right? I think Tesla could stand to get hit here pretty good. You look at Nike, you get Home Depot. If we go into recession, a lot of people like to do things on their home and build at home. So that should Home Depot and Lowe's. Bookings.com, so probably less travel. If you're smart, you're not drinking your $6 mochas when you can go to McDonald's and get them for $1.50. Better yet, you just make them at home. So a lot of these areas could get hit. Notice automakers as well. If we get to that point where people are really penny pinching and locking in their money, car sales are probably going to drop anyway. So that's one of the reasons I think XLY will probably be one of the worst performers of 2024. Let's see what I got. Traded no bias, trade what you see, not what you think. Exactly, John. And that's one of the reasons I don't want to do this kind of poll every year, but I think it's fun. I think it's fun just to throw a number out there and go, yeah, this is what I think's going to happen, but if it gets there, great. If it doesn't, great as well. Just so you guys can see the spectrum, I still have about 8 people I need to add to this list, so if you don't see your name on it, apologize. I'll get it on there, I promise. Here is your list. Come on. Daryl has got just visions of grandeur. Daryl, love it, brother. You have some serious optimism. I can't recall a year where the markets jumped 76% in a year, but that's our biggest forecast is 83.95, and our lowest. Mark Griffin's feeling apocalyptic. He says 2100 for the S&P. That would put it down almost 56%. I don't think we'll get there, but it could. There's always that black swan event, and just crazy things could happen, Mark. But anyway, that's our spectrum of it. A few of us, Scott McCormick said unchanged, so did John. Pretty much unchanged. So there we go. If you didn't see your name on the list, I will add it. You can just type it into chat, and I do it there. I had the same data I saw. Said average was 10.5. Yeah, the number I saw, John, from Trader's Almanac said on an election year, it's only up 7% since 1950 on average. So that's why I went with 7%. Long-term investor in Visa, with your guess of discretionary down this year, how do you think Visa will do? I think it's going to underperform. Now, there's 2 things to this. Number one is you look at Visa and you're thinking right away, okay, this is people could just go buy things with it. Well, yes. However, if we go into a recession and people don't have money or they lose their job because maybe there's unemployment starts to tick up a little bit, which we're seeing, right? Let's just real quick, let me bring that number up for you just so I can have it for you. One sec. If unemployment continues to slowly tick up, which it has been doing, then people start to lose their jobs, and ultimately they may be forced to pay for things with credit cards. So there's a little bit of a cushion for credit card companies, but that's an unfortunate one, right? If people are using their credit cards because they need to live, there's a problem there, a big problem. But let's go look at Visa and MasterCard's charts here just for fun. I'll go V. So So Visa has been just obviously kicking butt from 175 up to 260 since September of last year. Very nice move. I'll give you the percentage gains here in a second. It's roughly it's hard for me to get there, but it looks like it's about 50-something percent. 40, yeah, call it 50% move since those September lows. So great, way better than the market because people were spending. Buy. Well, you look at the chart. I have to go back to a weekly on this one really to get you the full perspective. And, it's hard to bet against this, right, Dwight? I'm sure that's what you're thinking is like, trend is my friend until the bend at the end. The one thing that's notable here, at least on the weekly time frame, is, we did have that drop down in 2021. Right, it sold off significantly from right around 250 down to 178. And now it's broken through all-time highs. So it's hard to go against this trend. And I do think that it will definitely have a little bit of resilience because it's used to buy things when you have money, but also as a replacement for money if you don't have it. And that's where people get themselves into trouble, which leads to bankruptcies and defaults and stuff like that. So hopefully it doesn't happen. But I do think that this chart will slow down. I do think there's going to be some pullback on this bad boy. It just moved up too much for too long based off of spending and money. As Pepe says, credit card debt is at all-time high, which is just incredible to see. Yep, I think it was 1.6 in credit card debt. I think you're right on that one, Pepe. I saw it a couple weeks ago, and it's just jaw-dropping that there's that much debt. The worry is that you have $1.6 trillion worth of credit card debt, and some people are paying 18, 19, 20, 25, 29% interest on it. Those poor people are going to struggle immensely going forward, and that puts further pressure on them with the money that they do have. So don't carry any credit card balances, people, please. I know you guys, we've got a pretty financially savvy group here. I'm sure most of you understand you should pay off your credit card in full every month and never carry a balance. Be the thorn in Visa's side. All right, don't let them make money off of you by paying interest on any debt that you own. Pay it off. Even if you guys have $10,000 sitting in a savings account that you're not doing anything with, and you have $10,000 worth of credit card debt, pay off your credit card debt immediately. You're making 0.01% interest on your savings, but you're paying 20% interest on your credit card debt. Get rid of that stuff right away. Let's go to MasterCard. MasterCard doesn't look as great as the Visa one we just looked at, but still a damn good-looking chart. Actually, I think maybe it just looked just good. Yeah, it does look dang good. I'm sitting at Starbucks drinking my small tall black. Yeah. Tom just loves to go after me for my fish addiction. For those that know, I am a huge fish fan, and I still can't get tickets to that damn show. But he says, I'm drinking a tall black coffee, which costs 1/20th of a fish ticket. But it also costs you, $4 for a cup of coffee, Tom? Like $4 for a cup of coffee? I can buy I looked at Costco, I can buy a 5-pound bag of Arabica beans and grind your own for $12 for a 5-pound. You drink coffee all year for $12. But no, gotta go to Starbucks. Do you drink it with your pinky out like this too, Tom? You like sipping on your... Awesome, Pepe. I haven't carried a balance since I was like 15. What else I got here? Credit card debt. Excellent. I think I got most of it. I beat it into my sons. Don't spend money you don't have. Exactly. And I, I'm still working on my course, my book on financial management. But I say pay off your credit card in full, but I use my credit card for everything. Like every single thing I can, I use my credit card for it, and I earn points and rewards and miles and just accumulate those. But I always pay it in full. And by the way, you should set up to auto pay so you don't magically forget. Right? Sometimes you forget. You're like, oh shoot, I forgot to make that payment. Now you're paying interest, and you get a ding on your credit. So auto pay everything. You can do it through the app. It's super cheap. At least pay the minimum. Merlin's experience, not the coffee. The experience at Starbucks, I don't know if that's an experience I enjoy. I love the smell of a coffee, but it just tears me up. I can't do coffee. Bad for me. What time we got? All right, 20 minutes. So let's see. I answered my questions as a guest here today. Gave my target, performing sector, and where I think the S&P will be by the end of 2024. Again, I am keeping a list. I am giving away 2 shot glasses. You have until this Friday if you have not submitted your number, right? Submit your number for what you think the end of the year is going to be. My 22-year-old daughter never carries a credit card balance. And Lisa, what should make you feel proud is knowing how far ahead of her peer group she is. Like, I'd love to see the average numbers of how much somebody spends on credit card interest by the time they're 25. Because in your 20s, you don't know this stuff. Oh, I got a card. I can just buy and spend and spend and spend and spend. I'd love to see that stat because I'm sure that the bulk of money being paid in interest is by the younger generation who don't quite understand it. So I love the fact you're talking to her about that. Here for the ambiance, and I will take home some electricity and spent coffee grounds for my cards. Oh man. So Tom's such a penny pincher. He's on his laptop at Starbucks because he doesn't want to pay the electricity that he's using on his laptop. Is that what it is, Tom? You charge up? Nice. Well, you know what, Lisa, one of the, as you guys know, I host trivia on Tuesday nights. I love hosting trivia because I just learn more. It's just kind of fun. If you look at New Year's resolutions, you guys type into chat, what do you think, according to Statistica, one of the analytics firms, what is the number one New Year's resolution? I thought this was interesting. I actually had it as my trivia question last week, Tuesday. But what do you think is the number one, or at least for 2024, the number one New Year's resolution? I'll let you guys type that in the chat, what you think. As you're typing it in the chat, you know, we all, I guess some of us make full New Year's resolutions. I really don't. I do little challenges on a monthly basis. I think that's much easier to do. Number 3 on the list was, hold on one sec, to make changes to their diet. Number 2 was to exercise, lose weight, right? But number 1 was to make more money. To make more money. Yeah, no, surprising, no, smoking's not on that list. Smoking is different, right? It's not like it used to be. It's vaping now is the big thing, and yeah, cigarettes are kind of almost taboo here in California, which is great. Michael says to feel better. Michael, the good news is for your New Year's resolution, you can feel better. You just got to do things that make you feel better, make you feel good. Absolutely, yeah. So number 1 was to make more money. You know, save more, make more money, that type of thing. Most do lose weight. Mine every year is just to get into better shape, but it's not. Lisa says to make more money. How? Typically by not spending it, right? So it was make more money / save more money. But go to your employer and ask for a raise. It was funny. I interviewed, not interviewed in this sense, but talked to a buddy of mine who is an executive at a company, and I won't mention which one, but he was saying that the vast majority of employees never ask for a raise, so they don't get one. They just, you know, they'll get their periodic raise as the company dictates it. But if you've improved your skill set and you have more value to bring to your company, why shouldn't you go and ask more? Don't be greedy about it, but hey, you know, I've learned these new skill sets, I've taken these new courses, and here's what I can bring to the company. I deserve a raise, and you'll probably get one. It may not be huge, but a little bit more money here and there helps. You know, the biggest factor, at least for me, in that equation of making more money is spending less. You know, one of the things that most people don't do is track all their expenses. And if you dive deep into your expenses, you'll realize there's a lot of stuff that you're spending money on that you really shouldn't. You're like, God, what did I waste all that money on? Let's see. When you finish financial peace university classes a number of years ago, our son was too young and he left alone. Nice. So the Financial Peace University, is that oh, come on. Dave Ramsey? Is that his Financial Peace? I think that's Dave Ramsey. Yes, there was a comment here. So start exercising and your symptoms will disappear. Yeah, if you're not feeling happy, exercise. Whether that's walk 5 miles a day or just go. One of the things I love doing is the stair machine at the gym. Brutal. Oh my God, what a butt-kicking exercise that thing is. But you feel like you're just getting rid of that negative energy. You focus on stuff and just exercise. It's good. Get out there and exercise. Let's see what else we got. Did a whole bunch of people sign up for Robinhood. Alex says again on my COVID's. Oh yeah, Lori. Sorry. Yeah. Hopefully that goes away. Hope you get your sense of smell back. COVID's a beast. Yeah, Dave Ramsey. Yeah, that's what I thought it was. Dave Ramsey says you should never use your credit cards for anything. I'm sorry, Dave. You're wrong. You are totally wrong. If you are financially responsible, you should use your credit card for every single thing you do. You buy a pack of gum, boom, charge it. All right. I bought a whole bunch of new studio equipment for some production gigs that I'm going to be doing here at the house, and I get reimbursed for it. So fine. It's all about $2,000 worth of studio equipment. Great. Click that button. It's going on my credit card. I got 2,000 miles coming. Not going to carry that balance at all. All right, let me go into what's happening the rest of this week. I'll jump into the earnings calendar, but there is nothing going on with regards to earnings calendar. There's no exciting stuff happening tomorrow. It all starts on Friday, which is the kickoff to financials. Here for the U.S. markets, you can see we really don't have much either. We've got a trade balance numbers, we've got the TIP economic optimism number, and you have member Barr speaking from the FOMC. That's pretty much it. There's really nothing exciting going on tomorrow. So I expect there to be a day where there's not a lot of clear direction. If you look here, and run through our top 7 markets just to wrap things up here. Go top 8 markets. Your worst performer on the day, as we mentioned, was crude oil. Ugly day for crude oil, continuing its downtrend. Right, I still am again saying it's a big wild card, but today big down day on crude oil, down 4.12% right now, off the session lows, but giving back 3 days worth of gains. And if that does continue, we'll be challenging that low we've got mapped out here at $67 on the CL futures chart. Number 7, gold. I don't like this at all. Gold was down 0.8%, and I don't like it because we tipped below this low from December 18th, and I'm kind of using that as a backstop. Now, we didn't close below the low. We broke down below it, and then we moved back up. So it's not that dangerous right now, but if there was any demand zone right around this 2029 mark, it blew through that today, but bounced back up. So it's okay, but not good that we broke those levels. It does feel like gold wants to go lower, which would bring us back down to this level I mentioned, which is right between 1987 and 1979. 10-year. All right, 10-year, you had a gap up today at the overnight futures. It's sold off. So it looks like it's big red candle, but it really wasn't that much of a change. If you go from Friday's close to where we closed, we were only down 0.44%. So slight decline there on that 10-year, no big deal. Dollar index was down 0.15% coming off that exceptionally volatile move we saw on Friday, right? Big long topping and bottoming tails. Today, slightly down, no big worry. It still looks like it's trending down overall, so the bias here would be to the short side, which would imply a bullish market. That said, 4th place, S&P 500 up 1.4% on that daily. Man, it felt like we just broke below those lows on the S&P. It's 47.43. Looked like we're going to keep on drifting lower, and then today just erases that and all of a sudden rips to the upside. So much for markets giving us any real strong direction for that S&P. Again, 48.01 is where we closed, or where we're at right now as of doing the show. 3rd place, Russell 2000, 1.9%. Same picture as the S&P. It looks more extreme, actually. It was a bigger sell-off on the way down, and all of a sudden a little bit bigger rally on the way up, 1.9% to bring it over the 2,000 mark for the Russell. The NASDAQ, though, is the one that took center stage, 2.09%. And, of course, you look at some of the tech stocks today. Apple up 2.42%, right? Your big dogs are the ones that were leading this charge. Microsoft up 1.89. One thing of interest here was NVIDIA. NVIDIA really surging through to all-time highs, up 6.43%, $522. So great move up there in NVIDIA. NVIDIA, people keep asking me, well, it's too expensive. It's too expensive. It's too expensive. I'm like, I don't think so. If you look at what's going on with NVIDIA, what they've got in the pipeline, their CUDA stuff, it should be $1,000 stock. I mean, this thing should be much higher, and I just haven't I've been waiting for a significant pullback to buy some, and it just hasn't happened. I'm waiting. You know, I would like to get it down around $400, but that might be a days gone by. And finally, we mentioned Bitcoin, 6.58%, busting out not to all-time highs, but just a recent high. The trend is looking gorgeous. I mean, this is a beautiful looking chart here that just keeps on making higher lows, and this is a sign of accumulation, everybody. When you see something that just keeps drifting higher and higher, but it really seems like it's making a clear trend line up, that tells you that people are buying this one on any little pullback. So good news for anybody who's long on Bitcoin. However, I do think the crash will come as soon as that Bitcoin ETF gets approved. Within a day or two of that approval, you should see a pretty big pullback, which would present another buying opportunity. All right, Dave Ramsey will take you from an F in finances to a B minus. Yep. Exactly. Yeah, I think he does a great job at straightening people out. I really do. Now, I'm not trying to bash on Dave Ramsey. Look, I apologize if that's the way I came across. I think Dave is wrong in a couple things, but no one's perfect. If you look at what he does and what he contributes to people's success, bravo. I think that there should be more people out there. I wish I had connections more so in that space, because I would love to be on that end. I would love to be on that side of what Dave Ramsey does and help people change their financial future. It's not hard to do. I mean, it really is not hard to do. You just have to work at it, have a plan, and I think you'd all agree, most people just don't know what to do. I think, oh, I've got money and I've got all these expenses, but I don't know how do I grow that wealth? How do I take the right steps with my money to put myself in the best situation possible going forward? I think most people just don't know how to do that or how that works. So, yeah, I didn't mean to bash Dave Ramsey. I was just kind of joking because he does say don't use credit cards. And as Pepe always runs to his defense, he says, remember, he says that for people that are deep into credit card debt, not for us. Correct. Those that understand the importance of credit card debt, you stay away from it, right? Use it, but don't stay in it. I'm pretty sure he embellishes quite a bit on his rich dad's. Oh, you're talking Kiyosaki? Yep. Okay, bring him on as a guest. I'm pretty sure, Jimmy, he would not waste his time with me. Pretty sure he is well above my league and wouldn't waste a cent or time and effort on this show, but I don't know. I'm not also I'm one of the worst networking people you'll ever get. Do what winners do and be a winner too. Exactly. I say this all the time, Rob, and I learned this from a friend of mine. He says, baseball players hang out with baseball players, bums hang out with bums, doctors hang out with doctors, traders should hang out with traders. If you want to be successful, you hang out with successful people or learn from those people so you can put yourself in that situation. If you're in a situation in life where you're hanging out with somebody that's in a completely different industry or bringing you down for some reason, you got to get rid of those people and hang out with people that want to in a position that you want to be in. All right, well, that's going to do. I'm going to wrap this one up. I'm at 52 minutes show today. Tomorrow, Jeffrey Hirsch. Oh, yeah, I'm going to remind him again tonight just because we're going to talk a lot of market statistics tomorrow. Trader's Almanac will be really the focus of it, looking at numbers, historical perspectives of market performance and stuff like that. So if you have questions for Jeffrey or myself, you can email me at TraderMerlin@gmail.com. The number is on, or email's on the screen. Post it down below any of the YouTube videos as well, and I will incorporate those in. I will spend some time this evening to get all that stuff updated. So thank you guys so much. Have a fantastic remainder of your evening, and I will see you all tomorrow. Take care.